In the first quarter of 2025, the U.S. economy experienced a contraction of 0.3%, marking the first decline since early 2022. This downturn is primarily attributed to a significant surge in imports, as businesses accelerated purchases ahead of impending tariffs introduced by President Donald Trump's administration. The rush to import goods before the tariffs took effect led to a 41.3% increase in imports, contributing to a record trade deficit. Since imports are subtracted in the calculation of gross domestic product, GDP, this surge significantly impacted the overall economic output. Consumer spending, a critical component of the U.S. economy, also showed signs of slowing. Spending grew at a rate of 1.8%, a notable decrease from the 3.7% growth observed in the last quarter of 2024. Factors such as severe winter weather and a post-holiday spending lull contributed to this slowdown. Business investments appeared robust, with a 7.8% increase. However, much of this growth is attributed to companies stockpiling inventory in anticipation of higher costs due to tariffs. Government spending declined as well, influenced by budget cuts and workforce reductions implemented by the Trump administration. Financial markets reacted negatively to the GDP report, with major indices experiencing significant drops. The Dow Jones Industrial Average fell by over 600 points, and the S&P 500 and Nasdaq also saw substantial declines. President Trump addressed the economic contraction by attributing it to the previous administration's policies, stating that the downturn had nothing to do with tariffs. However, economists widely link the negative GDP growth to the recent trade policies and the resulting import surge. As the economy adjusts to these new trade dynamics, concerns about a potential recession are growing. Economists caution that the effects of the tariffs and the associated shifts in consumer and business behavior may lead to continued economic challenges in the coming quarters. The Federal Reserve faces a complex situation, balancing the need to manage inflation while supporting economic growth. Current indicators suggest that the Fed may hold interest rates steady as it monitors the evolving economic landscape. Market Watch. In summary, the U.S. economy's contraction in early 2025 underscores the significant impact of trade policies on economic performance. The coming months will be critical in determining whether these trends represent a temporary adjustment or signal a more prolonged economic downturn.